Alright, so in this video, we're going to discuss about a long execution that I've did today inside of the PM session of the Nasdaq on the April 29th, 2025 at 1:30 p.m. ET. But for those of you who do not know me, my name is Alin. I've been predicting and documenting the Nasdaq since 2023 on to 2024 and on to 2025, and I plan on doing it for as many years as possible until eventually I cannot mention the years anymore. The reason why I do these videos is for the sake of documenting my own trading, as I have stated, and there's a second reason right now is, and I'm going to talk you through this quickly so I do not bore you. Recently, I have had some changes in terms of what I do outside of trading, and to help you, the community that looks and learns through my own executions and through my own explanations. So my Spend Capital business was based on a mentorship from May 2024 or March 2024 rather onto this year's January, when I switched to, or I tried to switch to a signals channel, which I did not believe that it was a right fit for me, as it took away the majority of the focus that I've had within my trading. And right now, the biggest change that I have had in my business model is the fact that I no longer do none of these things, as I believe that by my age, as I've just turned 22, I don't believe that I yet have the life experience, perhaps the trading experience I have, but I don't believe that I have the life experience to really mentor people at a deeper level, as I did not go through life as a mature person, I believe. So, another reason why I do these videos is to get you, the people who are watching this, to invest in how much capital you want, and I can trade it for you. And that would be a commission based, in which most of the portion would be yours, of course, because you take most of the risk, and I'm the only one that is risk free in this case. But our mission is to help you grow your money through my expertise and total devotement to trading. So by removing my mentorship, I still have 2 ongoing one-on-one students that I have an ambition to grow to their maximum potential. But otherwise, I'm not going to have more students. I'm not going to distract myself with signals throughout a trading session, and I'm just going to be fully focused on building the account. As for my results, you can see that I have again documented trading from 2022 even, in 2023, 2024, and 2025, and I continue to do these things again until I cannot mention the years anymore. And since January 25, I have been compounding a $1,000 account, and this execution that we're going to review throughout this video is going to be also based on that $1,000 capital, and I've been able since January 2025 slowly to compound it over 50%. Of course, it is $1,000. It is very easy to do it, but I believe that with just one contract of the Nasdaq CFDs to achieve these results, I believe that I can compound this account to 25,000 or 50,000 at the end of the year. So you can already see the perspective that I have upon a trading account. I do not believe in prop firm trading, even though this is somewhat of my business, but I believe that the experience in itself that I gain throughout the process of me growing an account from 1,000 to 50,000, I believe that that is worth more than any payout that I can receive from a prop firm right now, and I believe that they're collapsing in real time, so I'm not going to base my entire existence upon a prop firm. So within the weekly chart of the Nasdaq, I'm going to state the fact that within my free Telegram, I've shared with you one of the analysis that I've did with one of my private students on January 25. It was around the 4th of January 25, where I have stated the fact that my perspective for the year, I wanted to see the market go higher, taking on the previous yearly high, which was the 2024 or December 2024 high, or whatever month that was, November, or when the high was created. And then I wanted to see the market go down, reach the 12-month or the block opening price, which is, instead of the Nasdaq, Pepperstone broker is at around 16,419.9. And after said run, I was anticipating the market to go back into the range and perhaps consolidate for the rest of the year. And of course, everything that you can see inside of this weekly chart from January up until this month of April, it is exactly as we've stated. And do not believe me, go into the Telegram and see for yourself. But based on that perspective, which I've stated this only for the sake of you understanding my higher time frame perspective and my macro perspective. So I'm not doing this just to brag that I've been able to do this. I'm telling you how I formed the narrative and the direction for this specific week. Based on the fact that my higher time frame level, the 12-month level, which I do not advise you if you're not very eloquent with these concepts to go on a higher time frame than the weekly, for that is overkill right now, and that you should master really the micromanagement of yourself first, and perfecting your discipline and patience and all those things, and actually defining these words through behavior and not just some form of motivation. But let's just get back to the topic. So what I've looked at here is the fact that the market went back to the 12-month order block opening price. So my first perspective of the year was fulfilled when the market went higher above the previous yearly high, just with a small wick, which is beautiful to see. The market went back to the order block opening price, and as we went back into it, taking on level of sell side, which is this one, attacking the previous yearly sentiment, which is the core foundation to our smart money trading perspective. I was looking for the next part of the movement, which would be for the market to retrace back into the movement that we've created for this move to, or inside of this downward movement. So the market went back into the 12-month order block opening price. And once it went there, my perspective from bearish to bullish has shifted. I'm going to state the fact that I did not trade throughout the first week of April. I did not trade throughout the second week of April, as I've got caught up with some real life things, like real life happens. And then week 3 or week 4 was really my birthday. So again, I was not very involved. I was getting some trades, but nothing more than that. And you can see that yet again, the trades that I've took were highly selective, and they were, I was highly selective of the trades, and they were high probability. And this is how I trade. I only trade within the high probability setups. I do not choose a high frequency perspective, as I do not believe that matches my personality as a trader. But coming back to the charts, understanding the fact that I wanted to see the market go back to this inefficiency here. Well, I don't believe it's an inefficiency anymore as we went back into it. But we can go somewhere from this high to this low that was created within the 12-month order block opening price. Therefore, as I believe the fact that this is my drawn liquidity, so perhaps this level is not going to be reached. Perhaps it is never going to be reached, but I'm going to use that as a form of magnet. I'm going to use that as a magnet for my bias. So the bias, again, the bias is the direction, as I've stated in my mentorship, which is public, and the narrative is the how. So I'm looking forward for the direction, and I want to see how the market performs until that point. So that is the bias narrative. So I've had that drawn liquidity above that level of buy side. Therefore, I'm going to see every singular signature within this weekly chart to perform, if I'm correct, to perform in their best and peak capability. So this means the fact that order blocks should be respected, bullish order blocks, bearish order blocks should be absolutely disrespected, fair value gaps should be respected, bullish fair value gaps should be respected, and bearish fair value gaps should absolutely fail. And how do they fail? The market closes above them. And you might think that this is delusional, but this is not delusional, because what this gives me, it also gives me the rules that if the market is doing X, Y, Z, or if the market closes below the 50% of this bullish order block, then I'm going to stay sidelined, or I'm going to understand the fact that I was wrong within my weekly perspective, and I'm not going to do anything. Or if we are in the right circumstances, I will reverse, or I will go into the other direction, given that we are in the right circumstances. So given that I've had this strong liquidity, I'm going to look at this, even though it is not formed as an order block yet. We have these two consecutive down close candlesticks. I've looked at this as a future order block. So for this order block to be created based on the ICT mentorship, the market has to go above it. It does not have to close above it, but it has to just go and trade above it. That is when the market creates that order block. But until we get to that point, what I do and what I teach my mentorship students to do is, or I've taught my mentorship students to do, is if I understand that this is a high probability target, then I'm going to look at the 50% of this order block, or the 25% and the 75%. And if the market closes above the 75%, that I know the fact that the market has to go into the opening price, constant encouragement of this wick, and this high eventually. So as the market closed above or at the 75% of this two consecutive down close candlesticks, and I'm going to only take the bodies, because this is what I have been taught instead of the core content on ICT's mentorship. I understood the fact that the market should go back or higher into the opening price, and should not go below the mean threshold of this future order block. And this is the state of the weekly chart at, or inside of, the day of 29th of April 2025. And if you think that everything that I've talked about until this point has nothing to do with the charts, well, I'm going to explain to you how this has everything to do with the charts. So if I understood the fact that this is drawn liquidity, we close above or at the 75% of this, it means that the market, if I'm correct, the market should never go back below and close below the 50% of this future order block, if we are correct. So this means that we have a high degree of probability that the low of the week will be formed above or at the 75% of this future order block, or at the 50% in the worst case scenario. And if it goes beyond that, then I might be wrong and I'm going to stay sidelined, or I'm going to reverse my narrative. But if it doesn't, then I know that I'm right. And in the same time, based on the fact that I see this weekly chart right before I start my session, based on the fact that we have not hit this order block's high, based on the fact that I'm looking for the market to go higher into this high, then the fact that we did not even hit the high of this order block and we left it as a breakaway, and I know it states order block opening price, there was a mistake in my annotations, but I was running short on time because I was not looking at the charts prior to this moment. Based on the fact that we fell short of that order block high, I knew the fact that this was a sign of strength, that the market did not even want to reach that point. And if I am correct, then the market should not go back into it, number one, which means that the low of the week has been created, which means, again, that the market should not go back below this current week's low. So my direction is to the upside, and my narrative is the fact that we are trading after the accumulation phase of the week, after the manipulation phase of the week, in which we've created the low of the week, and now we're trading within the distribution. So to the upside. So we're trading within the weekly narrative. Moving towards a daily chart, based on everything that we've discussed within the weekly chart, what I do inside of this daily chart is I go in with the full perspective that the market is going to go higher. And yet again, this is not a delusional, as I create scenarios. Like if I am 100%, there's never 100%. You understand what I'm trying to say? If I'm correct within my narrative, then the market should absolutely perform these signatures. And based on my weekly direction and based on my weekly bias, which is everything that I've told you, the weekly bias narrative, the market should go there and it should not go there, and the market should perform this way. That is the narrative and the bias. Based on those two things, I will go lower into a lower time frame chart, which in this case is the daily chart, and I'm going to see yet again every singular signature perform at peak capability within a higher time frame defined bias. So this means that this is a swing low, that the market should not go below in any way, shape, or form. Market retraces back into this order block constant encroachment. This constant encroachment of this wick based on this order block, creating a swing low, meaning the fact that the market has started the expansion higher. We have a huge gap here in terms of the daily chart, which gives me strength within my narrative, but of course the market is very volatile within this here. Volume balance here, the market used it as means of support, and we have a gap here which has never been filled again. This would be constituted as a market structure shift. So this means the fact that this range, this movement right now has completely fulfilled its purpose. So this needs no revisit whatsoever. So there's no purpose for the market to go back there. Then this is Friday's trading, Monday's trading, and we already understood the fact that the low of the week, I believe, and if I'm incorrect, and this belief served me into a profitable trade after all. But if I'm correct and we've created the low of the week already, then this means that this current day in this current state should never go back below this low. And this is also the most powerful signature inside of price, the immediate rebalance, or there's a small gap here, but it's essentially just a small gap. But I would take this as an immediate rebalance, which means that the next 2 to 3 candlesticks should expand higher within my bias and my direction with speed. And what is the drawn liquidity? This level buy set right here. Therefore, inside of this day and inside of this session, I already know what levels should not be taken. I already know what to aim for. I already know the fact that the low of the week might already be created. And I already know what direction, and only one direction I will look at inside of this PM session. But if the market closed below this and went lower, I would never touch it, or I would reverse again my narrative. So if this happens, then I will do this. Nothing emotional about that. So this was the premise for this day. Moving back into a 15-minute chart of the Nasdaq, based again on the fact that we already understood the fact that the low of the week has been created. I'm going to see everything, if I'm correct, again within a one directional perspective. So if we are correct, then the market should see this as a sell stop rate. So the market, or smart money, accumulated longs right here, rebalancing some form of inefficiency too. So there's no purpose for the market to retrace back here as they are in long positions. So there's no reason for the market to go back here. The market shifted above this high and yet consolidated within this obvious relative equal highs, which are obvious levels of buy sell liquidity, which are even below our drawn liquidity on the weekly chart. So these are very easy to reach for, and they're very easy to see too. Within this day, we had the London session accumulation, we've had the manipulation within the AM session, and then the start of the distribution above the New York midnight opening price on the AM session. Lunch session consolidated, which is the best thing to do, if the best thing to see if you are if I am a PM session trader. I'm going to state the fact that I am not a PM session trader, but I sometimes like to look at obvious PM sessions as they're very easy and sweet, and they're very easy to trade. Not easy, but sweet to trade. So lunch session consolidation, my trading plan states the fact that I wait and I want to see the market go back below previous session low on a 15-minute chart for my narrative or my trade framework to start. So this is the first thing that I look for in terms of a lower time frame chart. But yet again, the bias, which is the direction, and the narrative, which is the how, was formed based on a daily and a weekly. So I'm looking at a specific direction, and I'm looking at the specific way in which price should manifest. So once this is taken and the market retraces back into this busy, and I know the fact that the market should not go below this low, and I see the fact that the market closed above it, created a swing low, and now it's trading, and this is before I took the trade, it is trading above this inversion gap, which is not an inversion gap, but I anticipate it to be an inversion gap based on my bias. I was looking forward for this low to not be taken, and this as well. So what is my next target? This would be my target for the session and perhaps for the trade, and this also. And once the market goes back into this, the market should not perform below this, and the market should use this. If it closes above it and this PDOA fails, it should definitely use it as a means of support if I'm correct. And what happens if I'm incorrect? Well, the market closes below it and continues lower. It might result in a loss for me, and I would be completely fine with that, because this is just a small business tax for me to understand the fact that I was wrong. And I'm very happy for me having a stop loss, because that limits the amount of loss that I would incur if I did not have that stop loss in place. Very simple. So once the market reaches back into this, I know the fact that we're trading within the expansion as we've just created the retracement. We successfully went back into the busy and we left it. And once the market goes back into this, which is not my original entry based on the time period, but once the market goes back into this, then, well, my normal entry, if I'm going to be honest with you, would be between, or when the market reaches back into this busy. So this would be my normal goal looking inside of the 1 minute chart trade. But in this case, I was not looking at the charts at that time, and I would just have to be content with this execution. But if I understand that this is not going to be taken and we're closing above this inversion gap, once the market comes back into it, knowing that we have to expand higher above these highs, which are very easy to see, then I will know the fact that this should be used as support onto these targets, and the market should not go below the 50% on this. And moving finally into a 1 minute chart, and you can already see how we went through the weekly, the daily, and the 50-minute, which this is what gives me the confidence to really trust these trades, because I've done the work prior to it. And now, once I hit the buy button, the control is not mine anymore. So, same premise. I am going to look forward for the market to go higher. The narrative I have already explained into the 15-minute chart. This is a sell stop rate, a market structure shift between the 1250 to 1310 macro time period, which again would be my normal and standard entry, but I was not in front of the charts. And after we have successfully closed above this inversion gap, knowing the fact that we still have to continue higher, and this is an unrealized target, and the target above it, the Monday's buy-side liquidity pool, I saw this as a breakaway gap or a measuring gap, because if you measure from this low onto my lunch buy-side liquidity, the fair value gap that stands at the 50%, if this is going to be left open, this is a huge sign of strength within our idea of the fact that the market is going to continue higher with speed. So if this is going to be left open, which I anticipated for it to be left open, and we have a big candlestick higher, then this gives me the confidence to know the fact that the market is not likely to retrace back into it. Therefore, my stop loss is below this candlestick. So what I did is, when I finished my analysis here, I missed this opportunity to go long inside of the BISI. But based on the fact that I was anticipating the market to finish this retracement back into the BISI and now to continue higher within the expansion, knowing that we have this levels of buy side correlated with this one, which gives the retail traders a resistance idea, knowing that we are going to start expanding higher, I took a close proximity trade based on the fact that we went back to the BISI and we closed above it. And I took a close proximity trade to this BISI, knowing that we might have a chance to not retrace back into it. And the reason why I did not want to see the market go any lower than this low neither is because we fell short of the 50-minute inversion gap high by, I don't know, maybe one tick, or I don't know, but very, very small. But this small signature gives me a better confidence within my trade, because I knew that if we're not even strong to get back to the 50-minute inversion gap high, then I know that we are trading within a strong market. And this was the result of the trade. You can see me inside of the video that I've posted, that I have stated that once we get above this high, the launch buy-side liquidity pool, or this high that was created within 12 o'clock to 1 o'clock, which is the lunch session, we're going to expand higher with speed. And right here, market goes back into this. Here, makes one more retracement, fails to go back into the BISI, goes higher. I was itching to write breakaway gap as this was forming, because I'm not in the business of predicting price just for the sake of predicting or for the sake of showing off, because I do not want to distract myself with those things while I'm in a trade, because I'm going to manage your money and I'm going to manage a lot more capital, and I cannot spend time in just annotating things for the sake of viewership. And I was looking at this once the market expanded higher and it finished the business of rebalancing this BISI. I was looking at this as I wanted to see this being open. If we are correct, this should not be revisited anymore, as we have successfully fulfilled the purpose of rebalancing this BISI. This is still intact, so my strength idea is correct. And the reason why I've stated the fact that this is going to be this is going to be taken with speed is because from this low up into our target, this is the 75% of the implied dealing range. So this was not inside of the chart when I was looking here. So this means that this is the profit taking zone. And when smart money is looking out for profit taking or distribution of profits, I believe, or I've heard this inside of the ICT mentorship 2023, if I'm not mistaken, or in some of his core content teachings, the fact that if the market goes into the 75% of the implied dealing range, the market should never see big retracements and we should see big expansions, because we do not want to see these people that have a resistance idea in mind, so they want to sell short on quote unquote resistance. We do not want to see these people get out of their trades. So what is the market going to do? It's going to expand higher with speed, and it will give them no chance to mitigate their losses, and they're going to incur even a bigger loss, as you can see here. Which this bigger loss of retail money actually gained me 10 more handles inside of my trade unwillingly. So in order for me to gain this free, which I didn't even want, but I've gained 10 handles more, for me to gain this, somebody has to lose them. Somebody has to lose them. So if I understand the fact that the market should not create big retracements once we're trading here, and this is some risk that you can also incur if you're trading within CPI, so your stop loss might not work. I know the fact that these people that were on the other side of my trade, their stop losses did not work, and I was the one to benefit from their stop losses not working during a normal market condition, if we can even say that this is normal, because it's crazy volatility. But breakaway gap, buy side liquidity will be taken with speed. Next one is here, auto block formed, higher, consequent encroachment of the wick, auto block again within the expansion. Market never closes below the consequent encroachment of this small wick. We're using it as a means of support, immediate rebalance, and we go straight to our target. So if you have found any value inside of this, make sure to join my free channel, which is going to be in the description below. It is just one click, but that is the channel where I document everything in real time, and I discuss about the personal things and the teachings that I gain not only in trading but also in all of my experiences. And I genuinely believe that this can be helpful if you are new or you are intermediate, or if you want to discuss about a potential investment opportunity. Make sure to join that and find my Telegram handle, and we can discuss more in private.